volume. There you go, guys. Sorry. I thought I'd do this as a live because I have just been busy today. I've not been able to basically get this prepped as a video. But I thought I'd talk a little bit about crypto specifically because there's been a lot of stuff going on with the crypto. Let me just check. Can everyone hear me? Let me just double check this because I've got the audio coming through. Let me know if you can hear me before we carry on. Because I know there's someone saying no audio, Pete. Joe. Yes, you can hear us. Okay, cool. Right. So there's been a lot of stuff going on in the crypto space. China banned all crypto activity in the past week or so. And that has kind of set ripples kind of across the crypto space with fears of what's going to happen moving forward. And with that being the case, there's also this concern around, the position around what's going on with the states, so on and so forth. So what I thought I'd do is just talk a little bit about that specifically, because the Americans have just come out and said that they are not going to be banning crypto, which is a good thing. And as a result of that, we've seen Bitcoin do pretty well today. Off the back of that, it gives a little bit more credence to the fact that crypto is being accepted on a more wide mainstream basis, and in particular with governments paying attention and recognizing it now. And if you follow the sort of crypto over the last maybe 2 or 3 years or so, and you'll be able to see how a lot of governments have changed position, particularly the Americans, and some of the language, how they've spoken about crypto has changed. It's gone from this whole kind of like fad, this thing that probably won't exist in 2 years' time, to there being a general acknowledgement that it is a viable and tangible asset class that does have a place in society moving forward. Now, with Jerome Powell saying in the last 24 hours that the US have no intention to ban crypto, that does give some confidence. But there is a big but to this, because I have been doing a little bit of reading, and one of the areas that excites me the most about crypto is the area of DeFi, or decentralized finance, and what that could potentially mean in terms of how crypto could take the place of banks, mortgages through smart contracts. That is really, really exciting, and it has huge user case implications. There is a very clear indication that the SEC in the States are going to be going after heavy regulation in that space specifically. And that's important, because when you look at the reasons why, and this is where we're going to backtrack to China a little bit. So if anyone who's been following sort of crypto and Bitcoin in China over the last year put in like little blocks, and it's been progressive blocks around crypto usage and trading in China. Now, obviously, China is very, very different to the rest of the world. It's a communist country, so therefore the government is authoritarian in a sense. They will implement things that they feel best benefit society. And what they've been doing is essentially, just cutting off access little by little. Even with the miners that we saw, a few months ago, they started to squeeze on the miners. Then they started to squeeze on the energy being made available to miners. So they couldn't actually have the energy to be able to do that, because they would rather have the energy go to, other purposes in China. Now, they've been doing that progressively. In the last 7 days, they've actually completely banned all crypto trade, everything. Now, many people are speculating because they bought out their digital yuan, which is their own cryptocurrency, which they've been piloting that and testing that for some time now. But for them, that is going to be the way that they're going to operate moving forward with their digital yuan. And what Bitcoin essentially represents is not just competition to that, but also there are other things in there as well around the fact that traditionally it's been very, very hard for Chinese nationals to get their money out of China. With Bitcoin, you transfer it into Bitcoin, and you can transfer it to any place in the world pretty easily. So they've kind of tightened controls on crypto in general. Now, going back to the US and going back to the SEC, they are working overtime at the moment to accelerate regulation in crypto. And one of the main areas where they are going to be focusing, like I said, is DeFi. Now, DeFi is going to be the apps that will enable staking, lending, trading, all those applications and things that we will talk about on this channel and you'll be watching a lot about here on YouTube. Now, there are reasons why they are targeting those specific areas. Now, there is an argument to say that it's going to be extremely hard for them to do. And yes, they have come up with quite a few challenges on how they're actually going to do that. One thing that Gary Seckler is trying to do at the moment is they're trying to find a link between the programmers of these digital apps, or these dApps, and trying to find some corporate linkage where they can actually insert some regulation in terms of accountability. Because for all of the programmers are just saying, well, we are programming a digital app that has a user case in this area. And therefore, it's very, very hard to place the responsibility of regulation and things that need to be done to the developers themselves. There has to be a way that they can insert the regulation into a process, so someone is held accountable somewhere in that chain, and that's what they're trying to figure out right now. Now, for many people in the crypto space, they'll talk about the fact that regulation is either deemed to be one of two things. It's either welcome or completely unwelcome, thinking, authorities like the SEC and the FCA should basically keep their nose out of Bitcoin and cryptocurrencies and just let everything be because it is a decentralized system. And I'm a big fan of regulation. I think regulation is important. Now, when you talk about regulation for crypto specifically, and this is where I think it's really important for people to understand why regulation is going to be really important, is because of the key things that, knowing your customer, right? Anti-money laundering rules, all these kind of stuff. And whilst many people will argue that, it's a lot easier to track Bitcoins and cryptocurrencies now, there is still a fear, certainly within the SEC and a lot of within the regulators, that cryptocurrency can still be used across borders, transferred nationally and internationally without really that much audit trail as to what's going on. And that is one of the big fears that they essentially have. Not to mention the fact that on the DeFi space, Bitcoin and cryptocurrency in the DeFi space is a huge risk to banks, huge risk to financial institutions that the governments essentially use to control things like inflation, the supply of money, and all these other economic leverages. And so I have a big but around the announcement of, there won't be any Bitcoin regulation, but there is going to be. And the SEC are most definitely looking at trying to tighten the screw in the DeFi space, which is going to be a double-edged sword. It's going to be a blessing in one regard, because with regulation, it may mean that actually you will have other providers, institutions actually come into the game, especially when it comes to things like, the investing side of things. If you're able to get things like crypto ETFs, those kind of things, those will be great. Crypto index funds, regulation will be great for that. It will allow and give the pension houses and big investment houses that hold billions and trillions of pounds and dollars to invest in that asset class with it being recognized. However, I do have a little bit of a concern in the DeFi space that they don't try and completely kill it off. Because the reality is, and what excites me the most about DeFi is the fact that in the future, the possibilities of DeFi mean that you could essentially buy a house and complete the entire mortgage process by simply buying the deeds to your house as an NFT. It gets rid of solicitors, it gets rid of conveyancing, it gets rid of all of that stuff that takes a lot of time and energy, and it puts it into one simple, easily executable smart contract. And you could do that at a switch of a flip. a switch of a button. And that's what really excites me about DeFi. And the user cases are huge. I mean, if you just think about, the transition of money across the world with the global payment system, and this is where you've got the user case for XRP. XRP, by the way, which everyone's saying should be $4 by the end of this month, currently isn't there. XRP and that management of payments across borders for institutions is absolutely huge. The reality is that payment system is decades old, is really not fit for purpose. It's very, very cumbersome, and it's very, very expensive. Cryptocurrencies like XRP are designed to make it quicker, make it cheaper. You wouldn't think that was a negative thing in any way, shape, or form. But the reality is that the success of something like XRP from a SEC point of view means that they cannot regulate the flow of that money. And what I mean by that is this: if I wanted to send money from here to the United States, if it's over a certain amount, it has to be reported. And there are certain things that the company facilitating the change has to do and report. Whereas with Bitcoin and cryptocurrencies, well, you don't have those checks in place. And those checks are important for anti-money laundering purposes, for terrorism purposes. This goes back to September 11, 2001, where, it took a very small amount of money on international transfers to bring down the World Trade Towers. And those rules were introduced shortly after that to ensure that if any amount of money over $10,000, I believe the limit was, it was reported and tracked and actually recorded in a specific way so they could always come back to the person. With cryptocurrencies, that's not going to be possible. And this is where the SEC and some of the regulatory bodies are very, very concerned, and where they're going to try and tighten some of the regulation that we're going to see moving forward. Now, that's the US. Are the UK going to take no? I mean, the FCA they're slow to say the least. I mean, I spoke to them, I think maybe about 2 months ago. And the response I got to the question I asked them was, we're trying our best. And that was it. So how would they respond? If the US takes a stance, it's very, very likely that the FCA will take a very similar stance to that as well. There may be little differences in nuance in terms of how a policy or a regulation might be administered, but you could bet your bottom dollar that it will probably be along the same lines. That will probably apply exactly the same for Europe, because again, developed markets, right? The transition between these three markets, the US, UK, and Europe, those rules are generally of the same kind of cut from the same cloth, along the same lines. So depending on what happens in the US and what the US decide to do, once the SEC get round to understanding how they're going to apply regulation, we'll then kind of understand what's going to happen here domestically in the UK. But do I think that this is going to massively impact crypto and its values moving forward? Probably not. I mean, look, we're not in a communist society, so they're definitely not going to take the stance that, China has taken and ban crypto trading as a whole and put a kibosh on miners, providers, and citizens. They definitely won't do that because we live in a democracy. But the regulation is going to be very, very interesting to see. And when the regulation comes in, how it's going to impact it short term, maybe negatively in the short term, but I think for the long term, it could be really, really good. As long as they don't try and kill off or try to too tightly regulate the DeFi applications, because really that's the stuff that is going to be world changing. I mean, banks are going to be quaking in their boots. Investment houses will be quaking in their boots, even from the insurance policies that applications and user cases that you have within DeFi. They are far reaching. It will change the financial landscape altogether forever. That's what the regulators are scared of, because it's very, very hard for you to be able to print money and make that available without going through traditional banking facilities like a bank. You need a bank to be able to do that. You can't offload Loans, well, you can with DeFi, but you can't control the rates in a centralized system without a bank. Remember, this is what they're scared of. And that's the bit that should excite everybody. It's the bit that excites me, just to see how it will change. But the regulation and how that's going to feed into it and how it's going to exist once regulation comes in is going to be the very, very interesting bit. And we'll have to wait and see. But who knows what's going to happen in the future. But I wanted to do a video on this and I didn't have time to actually film it, edit it. So I thought I'd do a live. But anyway, I know that there's a few people on. If you do have questions, we'll take some questions. We're about 17 or so minutes in. Maybe we can do another, maybe 15 minutes of questions if you have questions, either on Bitcoin or anything else that you may be interested in. But I've been looking at the chart on Bitcoin today, and actually it's done okay today. Let me just open this up actually. Let's have a look at some numbers and see how it's actually done. I need to make this little port bigger. And in terms of the market, I've been tracking the markets today as well. The markets are, Jesus Christ. Actually, you know what? I'm going to see if I can actually share this screen, because it's actually turned a little bit green this afternoon. But I've been using a slightly different, where's my share screen? Let's share this window. So we talk about investing for the long term, and we talk about holding your nerve a lot of the time when you're investing. I looked at this a couple of hours ago, and this was all red. I mean, this Google, the Google holdings here and the Microsoft, this has only just turned green, probably in the last 20 minutes or so. And some of these, literally about an hour ago, all of this was completely red. And if you're holding your portfolios right now, you probably will be seeing, if you're holding these companies, I mean, Apple's down 1.6%, you'll be seeing a lot of red in your charts at the moment. Amazon's down, you know. I think Tesla's still up at this point in time. If you're seeing this kind of stuff, I spoke about this on the last live, you know, just remember why you're invested in the first place and try not to panic with those kind of things. I know it's hard when you're seeing a sea of red like that, but the last thing you want to do is panic and potentially, you know, talk yourself into cashing in your portfolio when you really don't need to. And I cannot stress that enough. These kind of periods where you're going to have red spells, actually Tesla's down 3.26% right now. You have to kind of remember why you're doing it. And that's why a lot of the time, try not to pay any attention and try not to look at charts too much, particularly when there's bad news and there's a lot of volatility going around. Try to just, you know, avoid it, and always remember and remind yourself why you're invested in the first place. Let me just, I know there's a question there. Bear me 1 second. I'm just trying to get into one of the charts here, because I'm looking at Bitcoin at the moment, and Bitcoin is up today. And I think that is off the back of, you know, the good news that there is the US don't plan, or at least the Fed doesn't plan on actually banning cryptos moving forward. There is a question on here. Let me just grab this. The power of the common man on the use of decentralized currency might drop, and this will give power again to governments. That is true. I mean, look, it's all about adoption at the end of the day. And I think ultimately, and this is an interesting thing that I've noticed, what we are seeing now is we are seeing cryptocurrencies and the stock market diverge. And what I mean by that is, when the markets are down, cryptocurrency tends to go up, because it's being seen almost as this alternative asset class where people can actually go to. And in times when the markets are down, if we have high adoption rates and people view cryptocurrency as an alternative to the stock market, then what we might then see is, well, if the markets go down, people swamp and move over to cryptocurrency, which will be a good thing. But crypto and the success of crypto, and certainly for the values of crypto, it's all going to be about adoption. You cannot have, you know, Bitcoin get to $100,000 a coin, or Ethereum get to 7,000 without adoption, without people actively looking to use it as an investment vehicle or see the uses for it. It's what's been holding XRP back this entire time. Look, XRP and what they're trying to build there is, it makes 100% sense. It will save billions of dollars every year. It's quicker to send money. But with XRP specifically, it's reliant, it's under the assumption that the banks will adopt the XRP coin. And that's not what the banks are leaning to do. A lot of the banks are either leaning to develop their own coin, or they're just looking at it thinking, oh, it's great, but adoption of the coin is not on the cards, or hasn't been on the cards. And that's been the big thing. It's the adoption is really, really important in order for the coin values to really, really increase in value. I mean, if we had one of the banks who said, actually, you know what, we'll do all of our international transfers in XRP, and we'll convert fiat into XRP to do the transfers, then you would have high adoption rates. And in my opinion, you'll see XRP increase in value. But adoption is going to be the key here. Governments obviously will try to regulate and tighten control as much as they possibly can for taxation reasons alone. I mean, no government on this planet is going to allow billions and trillions of assets to be held in a currency that they cannot tax. They're not going to allow, and we've already started to see them move towards trying to taper that by instructing, people like Coinbase to report on accounts with values or balances over X amount. It's so that they can actually go and track this. Since 2010, the US has had a rule called FATCA, which is essentially a rule that means that any US citizen anywhere in the world, so if I'm a US citizen here in the UK, I cannot invest my money here in the UK without the company that I invest with reporting my account balances to the IRS for tax purposes. It's one of the reasons why US citizens find it really, really difficult to invest or open investment accounts here in the UK, because a lot of providers just don't want to be bothered with that reporting that they have to do to America under the FATCA regimes, reporting to the IRS what US citizens or green card holders have in their accounts. So, they're trying to taper this, but adoption, if the public and if the population want to go a particular direction, yes, they'll try and put regulation in place to discourage people, but ultimately there's only so much you can do to control people. And apart from or right out just banning it, I don't see how they would do it. I mean, even in China, where they have, banned crypto trading platforms altogether, I mean, how realistic is that in terms of actually stopping Chinese citizens from still being able to access crypto? Because if you use a VPN, you could still access crypto trading platforms, even though you can't do it domestically from an internet source without a VPN in China. But a VPN will allow you to sidestep that. So there's lots of things that could still happen. It's going to be interesting to see, really, to be honest. But yeah, I mean, Tommy Gunn is saying here that the S&P is down 2 to 3%. It is a very, 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 very uncertain time right now. It really, really is. There are too many big banks creating their own e-coins now. Wouldn't it get banned at this point? Well, the e-coins, or the coins that the banks are going to try and develop or are developing, will literally be there to compete. But the thing is, it's still controlled by the banks. So they can use it as a token, but how will it compete with the likes of, Bitcoin and Ethereum and, XRP, Cardano, Solana, basic attention tokens, and the user cases? I mean, how really is it going to compete with it? Because it's still centralized, it's still controlled by an entity, and that's the whole point of crypto, to be decentralized. How those two things are going to coexist, I don't yet know. So it will be interesting to see what basically happens. I have noticed a lot of news over the last week around about the big Britcoin, which is the UK government's digital currency that they're looking to launch. I haven't paid that much attention to it, but I've noticed more articles come out this past week, and that may be tied to the fact that China has banned, crypto trading in China, and China now has the digital yuan, which is going to be their go-to now. But who knows? It's really, really hard to tell. But anyway, guys, like I said, I didn't have time to actually make this into a coherent video and edit it down today, so I thought I'd do this as a live. But I do appreciate you guys for watching along to this as well. Is that right? Bitcoin uses XRP. I've not heard this. I'd be surprised if it does. I'm not, but actually it could as well. See, that would be a big adoption point for XRP. If, Bitcoin is to be based on that, that would be absolutely huge. That would be really, really big. And that would actually give XRP a lot of validation if it actually came to fruition and it's not just hyperbole. Because that will give it a test basis for other countries thinking about also developing their own digital coin. So that could be really, really, really interesting. What was the name of the company that was launched? Because I know that Ripple are behind XRP, and Ripple as a company, like with everything that they're doing at the moment in the background. I mean, Ripple you can't buy. It's not a company that is tradable. Yeah, so Ripple is not a tradable company, so you can't go and buy shares in Ripple. But I've always said that if they were a tradable company, they would be a really, really good company to actually have as part of a portfolio based on the work that they're doing in that space with the banks, international money transfers, so on and so forth. But yeah, that's really interesting, actually, Gothic. Thank you for that. I need to have a look into that because I wasn't aware that they were looking at using XRP. That would be big if they did. That would be really, really big. All right. Okay, cool. Guys, I think I'm going to end it there. But I'm just going to say, please don't panic about the markets if you're worried about that at the moment. Obviously, if you are in the markets at the minute, hopefully you're in there with, a solid goal and you know what your risk profile is and you haven't overextended and stuff like that. Hopefully you've had really good foundations in place. This volatility, it's going to pass. I mean, the markets are always going to be volatile anyway, so that comes as part of the territory, is what to expect. What happens from here on out with, the markets, whether they are going to continue to, bounce around or whether they'll fall or whether they'll just recover, is anybody's guess. You can't time it at the end of the day. So you have to take a lot of this with, a little bit of a pinch of salt and a little bit of faith as well. Faith in your convictions of whatever you've invested in, and faith in that research that you've done to back up your decisions too. Don't let this moment of maybe fear and anxiety be the catalyst for you changing things unnecessarily. This is a long-term game at the end of the day. So if you're you invested in ETFs and index funds over the long term, you're going to be absolutely fine. But I do know what it's like when you're seeing a sea of red. It's not nice, particularly if you're down quite a bit. It really, really is not nice. But, you just have to hold your nerve. It will come back. It may just take a little bit of time to come back, but it will come back. So just remember that. And just hold the faith and just try and relax, chill. Go do something else. Don't look at charts. Go find something else to do. Forget about it. Put it in the back of your mind. And it will come back when the time is right. But guys, appreciate you. Catch you later on.